GM, good morning. Welcome to Milk Road Radio, the daily show that's as iconic as the Macarena. Hey, Macarena, we got the moves to make your money groove. I'm Jay Hamilton. Today we're joined by Kyle Reidhead. He's the head of research at Milk Road Pro, and you might want to listen to him because he first bought Bitcoin at $3,000. Damn, way go, Kai. Today we're looking at the top 5 revenue-generating apps in 2024. And talking about why it matters to you, to your investments, and to this cycle. Kai, welcome back to the show.
Thanks. Great intro, by the way. Although I don't really brag that I bought at 3,000. I feel like I know too many people in the space that were way earlier than that.
I think there's a lot more who are later than that. So I'd say it's something to brag about. Kai, your internet might struggle a little bit because I know you're in Nika. So we'll hopefully work through this episode as best as we can, and you'll be coming back. You'll be leaving Nicaragua soon, I think. So you might be getting back into better Wi-Fi soon. Am I right?
That's correct. End of this week. Although there's like a hurricane here, so I might get trapped here. We'll see.
Oh no! Send help. Kyle's trapped.
Not actually a hurricane, but some bad weather.
Okay, before we jump into the top 5 revenue generating apps in crypto, first question is just why did you and the Milk Road research team decide to look into this data in the first place? What was it about figuring out revenue generating apps that is so important to you right now?
I think a few reasons. One is for the last 10, 12 years of crypto's cycles, let's call it, it's been dominated by infrastructure. It's been dominated by just blockchain, right? Bitcoin was the biggest thing for a while, and then ETH came in, and then there was a bunch of ETH killers that came in. Last cycle, you had Solana's big moment, and it was always been about blockchain. And as great as that is, we think blockchain is one of the greatest inventions that, I mean, we're going to live through at least, and it provides so much for us. At the same time, as that is, they don't really matter if we don't actually get apps that create real use cases on top of them. And not just a real use case, it has to be a use case that a business can run profitably. And if we can't do that, then all the blockchains that exist are here for nothing, except for maybe Bitcoin because it's money. So it doesn't need an app. It's its own app. But smart contract platforms, they need apps for them to actually have value. And so there's been a lot of talk, I guess, from the Blockwork guys, and actually Yano, who you had on yesterday, was talking. He said there's only so much blood you can squeeze out of a stone. And he's talking about basically the infra rock, right? The infra stone, which is these blockchains. And so to me, and there's still plenty of growth left in those, and I think, but to me, I think the next thing we need to be looking at is when are the applications going to be generating real revenues with profitable businesses, bringing in real users, and show that they can be a sustainable business on their own. And I think if you can understand those and capture the upside to those, you're going to do extremely well. So what are the sectors that are being built on top of blockchains that are going to do well? What are the applications within those sectors that are going to do really well? And so we've been putting a lot of focus into trying to understand that. Everyone wants to buy these altcoins because they're the ones that, have potential to 100x or 1000x. Or everyone's asking, which altcoin should I buy next? And the problem is most of them are literally just shit coins. Most of them just have tons of unlocks. They have no revenue. They have no users, and they're kind of useless. Like 95%, and it's honestly probably 99%. And so we feel that if we can really start to understand what are the apps that are generating real revenues and doing this sustainably, we can have an edge in the market. And so I think it's really important. And also, it's just the thing we want to be celebrating. We always talk about the fees that Bitcoin and Ethereum are generating. Let's talk about the apps, and let's celebrate the apps and what they're doing, because we need these things to gain adoption. And so we want to focus more attention on that side of things and move away from the infra. Although, of course, we still invest a ton in that. If you've seen our pro portfolio, it's like 80% of what we invest in. But when you start to want to go down the risk curve, you got to understand where the fundamentals are in the apps.
Yeah, completely. And as you said, this is a nice follow-up episode to yesterday where we had Yano, founder of Blockworks, on the show. And we talked about the Coinbase State of Crypto Summit, which was the who's who of not just crypto, but also institutional finance and TradFi. And one of the statements that Yano made during the show yesterday was that this cycle is finally the cycle for apps. We've been waiting for it to happen, and he believes it's coming, not because he's saying that himself, but because that was a statement that many of these leaders made at the Coinbase Summit.
The infra is finally ready, right? So like the infrastructure is what I'm saying there is finally ready for it. Like we couldn't have this in the other cycles because like we had Ethereum, but Ethereum was too slow for like real apps, right? Now we have Base, we have Solana, we have all these faster, high performant chains. We have Ton network, and so we can build real apps on them and get millions of users on them, and they still work. And we've never really had that before, and so now we're ready. And a lot of investment in this space is going into the apps. Solana, most of its investment goes into applications. Ethereum, most investment has always gone to infrastructure. That is finally moving to the app side, consumer apps. And so I think this is going to, and it takes a while to build these things once you get the investment, but I think it's the next big movement in crypto, in my opinion, and probably happens in this cycle.
Okay, without further ado, then let's jump in and look at these. What are the top 5 performing apps in terms of revenue so far in 2024?
Yeah, so we looked up year to date to see which apps are generating the most on-chain revenue, and so the 5 are Maker is number 1, which is the one we've been talking about a ton here, and obviously an investment that I'm super bullish on, as we talked about last week. Generated over $157 million in the less than 6 months, which is a beast of a revenue generation for an application like that. So that's super cool. That's the biggest by a long shot, almost double anything else. Second, though, comes in Ethena. Then we have Aerodome at third. So Ethena was at about 80 million, Aerodome 74 million. Then Lido, which is the largest staking protocol in the space, by TVL. They brought in 54 million. And then interestingly, Pump.fun, which is wild because their revenues really didn't start until around March. And so like they have generated $42 million, but it's not really since January to now. It's basically in the last like 3 months. I think they brought in 30 million in the last like month, which is wild. Now, will they sustain that? Unsure. We can go through each of these and I can give my like thoughts on them. But that's been a wild story for Pump.fun to be up there. Beats out, I mean, you think of the other big ones you might would have in here, Uniswap, PancakeSwap, like a lot of the DEXs, where most of the users are, and only Aerodrome made it, which is wild.
It's also amazing that Pump.fun hasn't even gotten the benefit of being around for all these 6 months that these other apps have gotten. So,
well, Ethena as well, technically.
True. Okay, let's go through each of these apps and just talk a little bit about what they do and their business that is really allowing them to generate this revenue. And then I want to circle back around and I want to talk about how this understanding this revenue impacts your investment thesis towards maybe these particular tokens, but also how it helps you think about blockchain adoption as a whole and maybe more of a zoom out about the categories and use cases that we are seeing get the most adoption from actual users. But let's start with Maker. So give us a little bit of we've talked lots about Maker, but give us a brief overview of what is Maker and how are they generating this incredible revenue?
Yeah, it's important to not just look at just the numbers on like DeFi Llama or whatever and see who's making the most or who made the most in the last month. It's, you want to understand who's making the most, but actually has a sustainable business model, right? And like, is it just a hype cycle or is this thing going to actually stick around for a while? And so that's why looking in and understanding how are these apps making money actually matters. So Maker, for example, is one that we believe this is sustainable and will actually just continue to grow. Maker is a bank for the Ethereum ecosystem. We talked a ton about this last week, so I won't bore everyone again on that. If you want to listen and learn more about Maker, probably just go listen to that episode. But it's essentially a bank. And the way that they make money is by lending out or minting a new stable coin called DAI that they'll mint out for those that give put collateral into the bank of Maker. And so obviously when you do that, there is an interest that you have to pay back. And so they make their money that way. They also make their money on swap fees for some of their tokens and then also for liquidations. Now, there's not a lot of liquidations in bull markets. This really happens at the top of a bull market. In the bear, they make a ton of money. But that's not like a sustainable thing where they're making it every single month. It mainly comes in at the top of cycles. But it's there's actually one other way that they make revenue, which is they have a treasury. So they make a ton of money and they take some of that money or some of that collateral and they'll put it into treasuries and they make a yield off that. So obviously with high interest rates, they've been making a ton off that over the last few years. So they're basically the same way as that a traditional bank would make money. It's just all done on chain. And so as long as the Ethereum ecosystem grows, Maker's going to grow. There's just no doubt in my mind.
And as you said, you can go back to last Wednesday. We had a whole episode breaking down Maker and why we believe it's one of the most undervalued assets in crypto right now. Kai, let's go to Ethena. Tell us about Ethena, what they do, and how they're generating this revenue.
Yeah, Ethena, you can think of very similar to Maker in the sense that it's also a stablecoin provider. Interesting that those are the top two in the space. Ethena, their style is just a little bit different. So in Maker, you over collateralize to get your DAI, your stablecoin. In Ethena, you don't necessarily need to do that. You just give ETH. They turn that ETH into staked ETH. And then they also put a short position on ETH. And so if ETH goes up or down, they're making money. And they basically take some of that revenue and give it to those who are holding the stablecoin SUSDE, I believe it's called, which is the Ethena stablecoin. So two different ways of basically issuing stablecoins, and in the back end, kind of just being a bank, you could call it. Both are very profitable businesses. Both, obviously, there's a big need for. People want to take out leverage, especially during bull markets. But even more so, people just want access to the US dollar that can move globally. Without all the slowness and the costs and the fees associated with doing it when it's like fiat currency. So I think both DAI and USDE, so Ethena and Maker stablecoins, are set up to grow as a result of just stablecoins being probably the best use case we have in crypto. And on the back end, being a provider of that, they make a lot of money. We've already seen Circle and Tether, both very successful companies, issuing stablecoins. They're centralized. We can't invest in them, at least not yet, until they go public. These are the ones that we can invest in that are doing it all on chain. Pretty cool.
Love it. Super exciting to see two stable coins up front. Clear use case winner right now. Let's go to Aerodome. We don't talk a ton about Aerodome. This might be one of the less known apps on this list.
Yeah, so Aerodome is a decentralized exchange on top of Base. And this one is kind of interesting. I mean, Uniswap you think of as sort of the king in terms of dexes, but Aerodome happened to just sort of reach product market fit on Base, and then Base just blew up, right? Meme coins, a bunch of other tokens that exist there. And Aerodome has managed to take not most, but a lot of the volume that's happening on Base. And Base just is continuing to grow, continuing to get more users, continuing to get more activity. And Aerodome continues to just be the place for that. So you can see in the chart here that it's more than 50% of all weekly volumes that are happening on Base right now. So it's a beast. Now, will it keep that? This one, I don't know. It's tough to beat the king, Uniswap. Maybe you can do it for a short period of time on a specific chain. PancakeSwap, for example, has been doing it on BNB for a long time, and Uniswap has never been able to take that over. Maybe they're not really trying to, I'm not sure. But I would imagine Uniswap's going to try and take this over on Base. So we'll see what happens here. But either way, Dex is the most commonly used app that we have on chain. If you look at the apps that have the most users, not necessarily the most revenue generating, it's all DEXs, the top like 5, maybe even top 10. It's all DEXs. So obviously the point of crypto is to have tokens for different reasons, and people need to swap those tokens. DEX is where you do it. If you can get those volumes, you can make a shit ton of money by just taking a little bit of fee on every swap, which is what Aerodome does.
So long-term bullish on Aerodome, short-term watch and wait and see.
Yeah, I don't know. There are a lot of people that are bullish on Aerodome. I don't see why they beat out Uniswap, but happy to be proved wrong.
Okay, let's go to number 4 on the list is Lido.
Yeah, Lido. So we've written and talked a ton about staking. Obviously, we think it's one of the biggest industries that's coming out of crypto here, which is to help secure the networks, these blockchains, but also earn a yield while you do it. And then more importantly, get another token that you can use in DeFi and do stuff with. And so Lido was kind of the first to do this, and they are now the biggest. They're actually the biggest app by TVL in all of crypto. Something like $32 billion they have accumulated over the last 3 or 4 years that they've been in business. And I see no reason of that necessarily slowing down. Now they make their money they provide an amazing service, right? So if you want to help secure the network of Ethereum, you want to generate some yield off of that, you could either run your own validator, which is very technical, and you need 32 ETH. So most people don't have that. That's like over $100,000. So instead, you can just take 1 ETH or half an ETH or 0.1 ETH. You can put it in the Lido protocol and you get all the same benefits without all the complexities of running your own validator. And so basically they pass all that yield off to you, but Lido takes 10% of that. And so makes sense. It's fair. I think it's a great business model. Maybe they won't always be able to take 10. That might go down. Let's see. But either way, they're making a ton of money from that. And as ETH price goes up, even if they don't get any more capital, they don't get any more users, their revenues just go up automatically as a result of ETH going up. So it's a beast of a business model. And if you believe in blockchains and proof of stake blockchains, then you believe, like, there's no doubt that this thing just continues to print money.
Who do you stake your ETH with, Kai?
On Ethereum, I have some in staked ETH, which is Lido, and I have most of it with Rocket Pool, which is a competitor to them, and just one I've been using longer than I have Lido.
Okay, so not necessarily because of a better product versus the other, just you got in one first.
Lido was getting a lot of market share, and I felt that could be problematic. And so I wanted to support some of the smaller ones. And also, Rocket Pool is focused a lot more on decentralization, so I feel it might be a little bit more secure. But both of them are great.
All right. Well, another conversation for another day, perhaps. Let's go to number 5 on the list is Pump.fun.
Yeah, probably the most surprising of them all. No one would have predicted. I think last year, if you told me what were going to be the biggest ones, you probably could have said something to do with stablecoins, something to do with staking, dexes. Meme coins was not going to be my answer, that's for sure. But Pump.fun, which is basically a deployer for meme coins, they've just recently surpassed 1 million meme coins, something like $32 billion they have accumulated over the last 3 or 4 years that they've been in business. And I see no reason of that necessarily slowing down. Now they make their money by, they provide an amazing service, right? So if you want to help secure the network of Ethereum, you want to generate some yield off of that, you could either run your own validator, which is very technical, and you need 32 ETH. So most people don't have that. That's like over $100,000. So instead, you can just take 1 ETH or half an ETH or 0.1 ETH. You can put it in the Lido protocol, and you get all the same benefits without all the complexities of running your own validator. And so basically they pass all that yield off to you, but Lido takes 10% of that. And so it makes sense. It's fair. I think it's a great business model. Maybe they won't always be able to take 10. That might go down. Let's see. But either way, they're making a ton of money from that. And as ETH price goes up, even if they don't get any more capital, they don't get any more users, their revenues just go up automatically as a result of ETH going up. So it's a beast of a business model. And if you believe in blockchains and proof of stake blockchains, then you believe, like, there's no doubt that this thing just continues to print money.
I think that it's very likely that the hype of meme coins continues to rip throughout the cycle and then crashes at the end of the cycle the same way that NFTs crashed at the end of the last cycle. So buyer beware.
Yeah, but the thing is, like, does it go away for good? Or, like, NFTs still exist, just in different forms. We don't necessarily care about 10,000K, PFPs, but we care about some forms of NFTs for some certain reasons and use cases, which means, like, the tools that were built around NFTs can still be useful and are still good businesses long term. And so that's the question of this one, is like, yes, 100%, we don't have millions of these things at the end of this cycle, but is there something that continues? And this thing in Pump.fun can continue to be like an important tool in it? That's what I'm unsure of. Like OpenSea, kind of irrelevant now, but they're Magic Eden, super relevant, right?
Yeah, there's definitely a place for these tools to continue to exist, definitely, regardless of the fact that many meme coins will go to zero. There will still be many tokens that people want to launch and that still do well, even in a bear market. So I agree that the tool itself still has potential, but the overall size of the tokens launching is definitely going to change when we're not in a bull market anymore. Kai, let's go to you and the research team put together this research to figure out which these top 5 performing apps were. You and I were talking before we hit record that, what are the sort of the takeaways, the lessons that you learned from this? And we talked a little bit about blockchain adoption and where adoption is heading. We talked a little bit about how this impacts your investment strategy. And then we also talked a bit about noticing which use cases and which categories of apps are the most popular. We don't necessarily have time to talk about all 3 of these lessons or takeaways, but I'll cue you up to sort of, is there one that you want to discuss, or you can quickly discuss all 3 to share why you think our audience, what they can learn from knowing these top 5 apps?
Yeah, so a couple things that I'm just going to go on a rant about here. I think the first interesting thing was that the top 2 are stablecoins, and I think that probably grows. I think, like, those 2 probably run away from the pack because stablecoins have gained $30 billion in market cap this year alone, and we're only halfway through the year. So, and it's getting faster and faster, the growth that they're hitting. So I think stablecoins have reached an inflection point, and so the providers for them are just going to continue to grow. Now, the question is, regardless if it's stablecoins, if it's DEXs, if it's something else, they're making a bunch of revenue. Why does this really matter? And what are they doing with that revenue? That's what matters here. And I think what we're going to start to see, and I remember calling this last year, and I said the super cycle doesn't come until we figure out how to create protocols that generate real sustainable revenues and find a way to accrue that value back to the token holders, right? Why would you ever not hold these tokens if they can do that? And I think we're going to start to see that here with some of these applications. For example, Maker makes a ton of revenue. Now it has expenses and things it needs to pay for, but its leftovers, it buys back Maker, right? So every month or every day, I don't know how frequently they do this, it's just always buying Maker token back. Now, why is that important? Well, that's demand on the token that's happening every day, kind of like the Bitcoin ETFs, right? We talk about that being demand. Same thing here with Maker, but it's happening with sustainable revenues every single day. As it makes money, it just buys back more Maker. What does that do? Well, it creates a flywheel where it tells investors, hey, you can buy this token because there's always demand. There's always buy pressure for it. And then Maker can reuse those tokens down the road to incentivize people to use its protocols or give more percentage out to its holders, right? Because it's obviously giving money to people who hold SDAI. And so you can do a lot more things with a token that maintains or grows in value. And if you consistently buy it back, you can consistently hand it out. Right now, we have a problem in this industry where tokens launch and then basically protocols just, they're not making any money. There's no buying demand on this token, and they just give out the token through airdrops, and it just, people keep selling it. People keep selling it, and then they run out of tokens, and they're like, okay, now what? We're basically done. Whereas if we can create real revenues and start to buy these tokens back, we have this feedback loop that just kind of never ends, where it always creates buying pressure and allows that company or that protocol, to keep pushing demand through incentives, right? But it's a balance that we need to find here. And I think some of these applications that we see in the top 5 here are going to start to do that. And if you see them do that, these are the tokens you want to be investing in, right? After the bull market, we've always say all these altcoins are going to go to shit. It's even happening now. You look at the markets have been tough the last little while. And it's because most of these tokens, most of these altcoins, there's so much supply being put out every single day because there's all these unlocks. So there's investors selling and selling and selling. It's like, why would you ever hold those things, right? This is why we don't hold much of them in our portfolio. But if you can find those ones that have these flywheels of buybacks, I think it's a massive opportunity. There's just not many that do it. There's actually basically none, but they're coming.
Yeah, that's a really great point. Kai, thanks so much to you and the research team for putting this together, for showing us these apps and breaking it down in a way that we just don't look at often enough. Everybody needs to be focused more on the revenue and building sustainable businesses, but it's just it's so tasty and so tempting to get stuck in market cap and FDV and valuations of these tokens and just trading them, when really we got to remember there's real businesses being built here. So shout out to you and to the rest of the team for putting this together. Thanks for joining us today. In case you missed it, the zkSync airdrop finally happened. It airdropped at a 900 million market cap and a 5 billion FDV fully diluted value. Now, what we noticed is that nearly 41% of the 10,000 wallets who received the token have already sold their entire allocation. The amount sold across all of these wallets was over 486 million tokens, which represents approximately 14% of the supply, indicating, no surprise, that a lot of this was airdrop farming. The story will be told in the next few months as we see if zkSync can maintain their price, can maintain their FDV in the face of losing their incentive campaign and their airdrop farmers. Next up, DJT, which is a Solana-based meme coin that launched a few months ago, saw its price rise 180% on Monday, which got our heads turning when the rest of the market was red. What the heck happened with this meme coin, which got its market cap to 374 million? Well, what's the reason? Guessed it. Another Donald Trump rumor. So there is rumors circling that Donald Trump himself is the driving force behind this token. Obviously, if true, I mean, yeah, it would not surprise me at all. He's already launched an NFT collection. It would obviously be the first time in history that a presidential candidate has created a meme coin at the same time as he is running for office. You can't make this shit up, folks. We'll see how this goes, and we'll keep you in the loop. Meme coins go up, down, sideways, especially during volatile times like this. So DYOR and be careful out there. Finally, a recent app launched that's called time.fun. Now, this app allows you to tokenize your time. It's built on Base, and essentially anyone can go into the app and you can sell tokens representing your time. And then those who buy those tokens can either trade them on the open market or they can redeem them at any point for access to your time. Will this app make it? Will it be the next Fantasy Top or the next Friend Tech? I don't know. It's too early to tell. But as we talked about in today's show, this is the cycle of apps. There is now the infrastructure for there to be apps which have great UX, which are easy for customers to onboard to. So let's see if time.fun is the next app to catch the wave and grow, or it will be something else. Whatever it is, we'll keep you guys in the loop on it. Thanks so much for joining in today and for listening. Have yourselves a wicked awesome day. Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.